Hi everyone, let's talk about natural gas. Actually, the truth is, I wanted to tell you the exciting news. The Swing Trading Blueprint course is launching on the 14th of September, about 2 weeks from now. There's a link below. Make sure you're on the early bird list. So that's the official release date, the 14th of September. And again, make sure you're on the list. Now, let's have a look at natural gas. So really good rally yesterday. Let's have a look at the 4-hour chart on the Henry Hub, because we have rolled over into this new contract price and we're trading at $2.14 right now after a big bullish candle middle of the day yesterday after the inventory news and all that sort of thing, and just generally angling down. Now, what's interesting about this chart is that we did turn exactly where I thought we might. Let's have a look at the daily chart, and I think we may have just penetrated that rollover gap just above here. Let's have a look. Actually, I'm going to go straight to the NYMEX chart. And so here we've got the Henry Hub futures at the NYMEX. Right, so there's that rollover gap. Refer to the last video when we talked about these in some detail, but we tried to just get to the bottom of that gap once again, just making a double bottom. Remember I said that we would probably make a double bottom here at the bottom of this trend line at the rollover gap, and I thought we could get to the bottom of the gap. We didn't quite get there still yet again. In fact, almost a perfect double bottom, just a fraction lower than the previous one. So beautiful bounce on the rollover, and here we are trading at 2.16. Just a couple of days ago, looked like we were going to 1.5. Anyway, so far so good, and we're still long and holding a long position in reasonable profit right now. So let's see how we go. Let's go to the 4-hour chart and have a quick look at this one. So there we go on the 4-hour. As you can see, we rolled over into the October contract on Wednesday, and that's what pushed this price up. A nice rollover gap, actually, and we've held that level really nicely. Now, the interesting thing is the futures here at the Henry Hub are trading at 2.15 now. But if we go across to the spot price at Pepperstone, you can see we're trading at 2.03. So there's some catch up for the spot price at Pepperstone to get to 2.15, and that's right up here in this region over here, near the top of this block or this band. So at some point, if the futures hold up, this price will begin to move up too. Now, just looking at the futures, just to remind you on the 4-hour at the Henry Hub, looking pretty strong, pretty positive. Holding up really nicely. 2 really big bullish candles that took place after the rollover, which is significant. So we didn't get those. Often we get those bearish candles that just reverse the rollover gap and completely fill it up and sometimes carry on going lower. On this occasion, the 2 dominant candles straight after the rollover have been 2 big 4-hour bullish candles. So it's all looking good. Next target is 2.25. We've got to close above this order block here on a daily chart basis. So let's switch to the daily chart. You can see why this level is so important. It's that top level there that we try to get through. It's where all these moving averages are, the 200, the 50, and the 100. So it's a big resistance area. That's the day chart. Looking at the 4-hour chart, the same sort of thing, except you can clearly see where this order block is, ending at about 2.25. We've got to get through there and close above there on a daily basis for us to see, I think, further progress up to maybe 2.5, 2.8, somewhere around there. My eventual target is $3, of course, and then up to $3.40, 50, 60, or 75 later in the year, perhaps around December, I suppose, but maybe early into 2025. Let's see how we go. But so far, this is looking pretty good and pretty constructive, and I like the way we're moving along. I actually wanted to just show you this on the weekly chart while we're here and show you that this looks good on the weekly chart too. So we've got to zoom right in. We've got these 2 weekly candles, this one this week and 3 weeks ago, 2 big bullish candles bouncing off the same level, double bottom. And today's or this week's candle, today will decide how this closes. Maybe it's going to go a lot higher. And this week's candle will end up being a piercing engulfing pattern, which is a very good bullish reversal candle pattern. So I think this is going up. As I said to you before, natural gas loves double bottoms and double tops. I've drawn quite a lot of these in here over the past, as you can see. Double bottom, double top over there, double top. This was a triple bottom that we're trading against right now. That's the big reason for me thinking that we're not going to get below there, because that triple bottom's pretty secure. And then, as you can see, I've drawn in, there's another, quadruple bottom. And then I think I've drawn, there's another double bottom. So yeah, so we've got this beautiful double bottom formation right where we are at the moment on this weekly chart, and with this piercing engulfing pattern busy forming at the moment. If this candle this week closes strong, roughly where we are now, or even higher, it will be a pretty good sign for the bulls. So I hope you enjoyed that. Make sure you sign up at the early bird list below. I'm looking forward to seeing you all in the course in September, and good luck for your natural gas trades, and I'll speak to you soon. Trucks be rolling, rattling down the road.
natural gas, fill